Elon Musk has done it again. He once again made some spectacular comments during Tesla's most recent earnings call. Tesla released its Q2 earnings results last week, beating some of the street's estimates, but overall disappointing investors on some key metrics. Tesla stock is down 10% since the Q2 result was published, but what's more interesting is what Elon Musk said during the Q2 conference call. I would argue that some of the comments that Elon Musk has made during the call will make any intelligent investor think that he has completely lost his mind. So in this video, we'll take a closer look at 3 comments that Musk made, and we will also run a quick and dirty DCF valuation to figure out what is already priced into Tesla stock. So without further ado, let's get started. Okay, so last week Tesla reported earnings. And revenue growth of 47% was once again very strong, very impressive, and so was the number of delivered vehicles, which was up 83%. But the company disappointed on some other metrics, mainly on profitability metrics such as declining gross margins and also declining operating income margins. In this video, I want to focus on Tesla's earnings call, which is always a fun experience because more often than not, Elon Musk will say something that is, unscripted or not pre-planned. And the Q2 call did not disappoint on that, and I will focus on 3 excerpts from the call that you absolutely should not miss. After the earnings call, Tesla's stock was already down 4%, and as highlighted in the intro of this video, the stock then continued to decline in the following days. So what happened during the call? Well, let me just play the first clip from the call to you.
If I may, it's like, look, the short-term variances in gross margin and profitability really are minor relative to the long-term picture. Autonomy will make all of these numbers look silly. I'd recommend looking at ARK Invest. I think their analysis is very good. The best, and generally, FinTwit or like the finance, the smart finance people on Twitter, follow their accounts. They're great.
Okay, so if you've watched some of my previous videos, you will know that I'm not a big fan of Cathie Wood and her team at ARK Invest. The ARK Innovation ETF, ticker RAKK, allowed Wood to collect more than $300 million in fees despite her poor performance over the last 2 to 3 years, losing billions of investors' money that mainly invested in the ARK fund at its peak in 2021. Tesla, of course, is the biggest position in the ARK Innovation ETF with a weight of around 10.4% as of today, representing a market value of $910 million. I think in total I've made around 3 videos on the analysis work presented by Cathie Wood and her team, and I've always come to the conclusion that Cathie Wood may very well be a marketing genius, but she really doesn't understand how to value companies. Or maybe I should put it this way, she either does not know how to value businesses or she does not want to value businesses and instead wants to present a narrative that may justify certain company valuations. In fact, in May I published a video exposing her $8 trillion Tesla lie and highlighted that Tesla's revenue in 5 years would need to 65x to make Cathie Wood's assumptions come true. So I think the fact that Elon Musk now highlights that he thinks the ARK Invest analyses are very good doesn't surprise me at all, because after all, the majority of Elon Musk's net worth is tied to Tesla stock, and so obviously he's interested in keeping Tesla's share price high. Okay, let's move on to another clip from the Q2 call in which Elon Musk explains and outlines where he sees Tesla's stock heading in the coming years.
On Twitter I posted just really advising, because I care a lot about the sort of the small shareholders, especially ones that have stuck with us through thick and thin. I love you guys, and so we can't control these macro shocks, or the manic depressive nature of the stock market. So that's why I recommend against margin loans in times that are turbulent. If times are not that turbulent, actually a margin loan can be a smart move within reason. But we're in, I would call it, turbulent times. I have very high confidence in the long-term value of Tesla. I see it, I really, see a path to it.
Okay, again, there are a few things to unwrap here. First of all, maybe Elon Musk talks about the use of margin in investing, which refers to the use of debt to boost your returns. And you can probably have different views on the use of margin and leverage investing, but I'm clearly in the camp that stresses that it is extremely dangerous to use leverage and can make you lose everything. And so in my view, it's probably not worth taking on that risk. Remember that there is no shortcut to building wealth. You need to be patient, think long term, control your emotions, and avoid being overly greedy. So please don't use leverage when you make investments in the stock market. Pretty much every financial blow up that I'm aware of was caused by leverage. Okay, what's even more noteworthy, maybe the fact that Elon Musk sees a path for Tesla to 10x in the coming years. And I know that historically betting against Elon Musk has been a losing trade, but to be honest, I think Tesla's stock 10xing from the current level is extremely unlikely, and I will show you why in a second. I mean, to be fair, Elon Musk didn't give us a timeline here. He didn't say by when he expects Tesla's stock to 10x. But let's just say Tesla's stock could 10x over the next 15 years, which basically represents a compounded annual growth rate of 17%. So let's do a quick valuation exercise. And what I'm going to do here is I will take a look at Tesla's last 12 months of free cash flow. I will then subtract the stock-based compensation expenses to then arrive at Tesla's true free cash flow, which as of now is around 4.5 billion US dollars. And from here on, we will have to make a couple of assumptions just to show you what one possible scenario could look like. If we assume that Tesla can compound its free cash flow at a rate of 15% a year over the next 15 years, which is already pretty damn impressive. And if I had to bet, I would bet that Tesla will not achieve this performance. I came across this table here on Twitter a few weeks ago, which shows how difficult sustaining above average growth actually is. And obviously very high growth gets harder once you reach a larger revenue base. And Tesla is right now on its way to reach $100 billion in annual revenue. Anyway, to get back to my first scenario, if we assume 15% free cash flow growth over the next 15 years, and if we assume that Tesla trades at a free cash flow multiple of 15 in 2038, well then Tesla's market cap will be 546 billion US dollars. And when Elon Musk made the 10x statement, Tesla's market cap was 910 billion US dollars. So what this means is that 15% compounded free cash flow growth will investors actually give a negative return of almost 3% per year. So somehow we have to arrive at a market capitalization of 9.10 trillion US dollars. Okay, let's make this work. If we assume 60% growth in the first 5 years, followed by 40% growth between years 6 and 10, and then 20% growth in the years 11 to 15. Then we get to a market capitalization of 9.5 trillion in 2038. And just for context, Tesla would then produce around 6 times more in free cash flow, 600 billion US dollars, than the biggest and one of the most profitable tech companies in the world, Apple, generates today. And just to be clear, when we make forecasts for the next 15 years, these forecasts will inevitably be wrong. But I think you get the point that assuming a 10x from Tesla's current valuation, or I should say Tesla's current stock price, is absolutely nuts. And an unbelievably high number of things have to go right for Tesla to make Elon Musk's dream of 10xing Tesla's stock come true. Okay, let's move on to another interesting part of the call. Elon Musk went on to reference Warren Buffett, and I think investors can actually learn something from this short clip. So let's have a look.
When the market panics, buy, and when the market is, overly exuberant, you can sell. I'm not recommending you sell Tesla, but buy low, sell high. Warren Buffett actually, I think, has a saying. I'm paraphrasing him, but a publicly traded company is like it's like imagine you're living in your house and a crazy manic depressive guy comes and stands at outside your house and yells property prices at you. So it's a different price every day, but the house is still the same house. So this is the stock market. Really credit that to Warren Buffett.
Okay, and to be fair, that's actually some very solid investment advice from Elon. After all, the concept of Mr. Market was first introduced by Benjamin Graham in his book, The Intelligent Investor. And Mr. Market is a personification of the stock market, representing its emotional and unpredictable behavior. Graham basically used this metaphor to remind investors that they should not follow the market's wild swings, but instead focus on the underlying value of the businesses they own. And I think simply being aware of the volatile emotional state of the market or Mr. Market himself is a very important lesson that every investor needs to learn early on. But at the same time, as highlighted, you also need to understand how to actually value stocks and businesses. And if this is something you would be interested in, make sure to take a look at the description box down below. And with that, I'll wrap it up here. You might want to check out one of my other videos on the valuation work and analysis by Cathie Wood. Take care.